Well, it's time for the local versus offshore, which is lacquer challenge. And Magnus Heystek and Piet Viljoen have stepped up to the plate to participate in this. Just by way of background, a BizNews community member said he's tired of hearing Magnus saying that offshore is better and Piet saying that local is lacquer. And he actually wants to put the two of you to the test. Magnus, I know you've stepped up to agree to do this. What motivated you? I think you had one of these challenges once before, if I recall, when you were still the financial editor at the Star.
We did a comparison between unit trusts and endowment policies. You might recall endowment policies were the rage years ago, and I said, no, cost structure is against it. And so this is a comeback fight for me. I mean, after many years, I've been training and I'm in good shape, and I'm up against Piet, who's had a cracking 3 to 5 years in the market. So I better know my stuff. And it's, of course this is real money. That client who wants to remain anonymous, he said he's putting up his own money. I think it's 500,000 a pop. And he says, play with real money and stop the talking and let's see what you got. And it's going to be quite fascinating. So I hope our audience will learn from it, because it's a learning experience for both of us and for the audience, how the markets fluctuate and what dominates, what doesn't dominate, and the various factors influencing decision-making processes.
Peter, it's a smart call by our community member, because he's giving a very public challenge to the two of you, but presumably he's going to have the benefit of all of us watching how those portfolios perform. Isn't there a risk, though, from your perspective, that if offshore beats you here?
So there is that risk there, and I think it's quite possible. I'm not saying one should be naive and have all your money in South Africa because such good value and returns are so prospective returns are high. I think how sensible investors should position their portfolios is whatever you think your natural exposure to South Africa should be, whether that's 0 or 5% or 50%, you should have slightly more than whatever that natural exposure is right now because of the value on offer out there. So if your natural exposure to South Africa is 0, have 5 or 10% exposure. I think that's sensible. And if your natural exposure is 20, have 30% exposure. So it's just right now, given the valuations of really good business in South Africa, on the South African market, on the JSE, the prospective returns, despite historic returns being quite high, the prospective returns are still quite high because these companies have not really re-rated very much at all.
Peter, do you think the period is suitable, the period that you've been given to compare the two?
Yeah, I think the window of opportunity for South African stocks is the next 3 to 5 years. I don't think you want to be in them forever. There will come a time when you want to be out of them. In other words, if your natural exposure is 10%, you probably want to be less than that. That time will come. But I think over the next 1, 3, 5 years, until that happens, I think some exposure to South African assets, cheap value South African assets, is definitely warranted.
So we do want to keep this updated. Magnus, what's a good period? When should we be revisiting the local versus offshore performance? 1 month, 3 months, 6 months, 9 months, 12 months, only every year?
I think, we need to chat every 6 months and just have an update and say, how's it going? 1 month, 3 months is a waste of time. I mean, even 6 months is a waste of time, but otherwise people will forget about the competition, and I think you want to attract people. But the point that Piet is making is absolutely right. It's not an either-or situation for most South Africans. Most South Africans still will have a South African exposure. Even myself and even my clients will have it. And I want to make sure that if I do have a South African exposure, I'm in the hands of a fund that can stock pick and select and outperform the market, which Piet has been doing quite dramatically over the last 3 to 5 years. And we're very happy to support you. And that's the irony of this. We are supporting Piet's fund, and he's keeping our clients very, very happy. But we also have money offshore. There are so many variables in the investment game to confidently say, local is going to beat offshore, or offshore is going to beat local. It's a foolish statement to make. And you've got to see it in a greater context of your global asset allocation, your objectives and time horizons, all those factors. And that's why I like doing this. Hopefully it will educate people to think about investment and the process that goes into making an investment decision, whether it's for the individual or whether it's for a larger group of people. And I think that's what's lacking in our debate in South Africa, which has become fairly acrimonious in certain instances. Where you get local fund managers getting up and using 1 year return figures, and as if that is the reality, and they forget about the last 5 years, and vice versa. So it's a good time to have it. And as I say, may the best man win.
So it's a 5-year game or 5-year competition. It's real money that's there. We're going to go back every 6 months and have this conversation again. Are you able at this stage, Piet, to tell us where you're going to be putting our community members R500,000?
Yeah, it's going into the Counterpoint Value Fund, South Africa Value Fund. So it's a fund that is invested 100% in South African domiciled business or listed business, South African listed businesses, and very much picked on a value basis. So we pick the cheapest stocks we can find.
So it's 100%. The whole R500,000 is going in there. You're not going to take a bit of crypto on the side or perhaps something else that might give you a sweetener?
No, I'm not. No, I'm not looking for sweeteners or something on the side. My own money is in the value fund. I don't have any assets, any stocks outside of the value fund. All my own personal money is invested in the funds that I manage, without any outside. What's the term used?
Sweeteners.
Sweeteners. No outside sweeteners.
And Piet, just to let everybody who's watching this feel a little bit more comfortable or more informed, what are the major stocks in the Counterpoint South African Value Fund?
Yeah, so the top 10 holdings, the top holding is MTN. Discovery is one of them. Sanlam is one of them. Absa, Nedbank, Anglo American, Exaro. So it's a broad mix of commodity stocks, of financial stocks, of industrial stocks, and the common denominator is that they're all trading well below what we believe the intrinsic value to be. The market price is well below the intrinsic value. I think the biggest exposure to the stock, if one looks at the top 10, it's all large cap type companies, but the fund is very overweight small caps. So if you look at it on a market cap basis, I think the All Share Index has 80% of it is large cap. We're sitting at 60 or 55% large cap in the fund and 45% small to mid cap, and that's only 15 to 20% of the All Share Index. So the fund is able to significantly get involved with some of the smaller situations in Africa, and that's where the neglected value is in the market. As people withdraw the money from the market and move offshore, those things just get sold. And as the market, as the flows concentrate into the larger fund managers, they don't care about the small stocks, so they never buy them. The indices don't care about them; they never buy them. So it's a neglected, ignored part of the market, and that leaves investors who are willing to trawl through that part of the market with very rich pickings. And the returns that the Counterpoint Value Fund has generated over the past 5 years is testament to that fact.
That's where you'd find the Avenge, the Lewis, and companies like that you told us about.
Exactly, yeah, 100%. Yeah, the sort of the twigs, as I call them. So I see the composition of the fund as a bundle of twigs. Each individual one, like a Avenge or a Lewis or a Rebosis A or whatever, Sendus Health, each one of those is a twig. It might break very easily. It might be worth naught, but if you bundle them all together in a portfolio, you come up with quite a robust situation. And that's what the Counterpoint Value Fund is, a bundle of twigs.
And how often are you going to change that portfolio in the next 5 years?
The turnover in the portfolio is quite low. Of course, if prices change dramatically of the assets, then the fund will change. But the fund, I'm not going to change the fund just because it feels good to change the fund. The fund responds to market prices relative to the intrinsic value of the businesses. So if those change in a dramatic way, the exposure of the fund will change dramatically. Otherwise, the turnover in the fund is quite low. I think the turnover in the fund is less than 25% a year. It's very low.
Magnus, how have you decided to allocate the $500,000 that our community member has put or entrusted to your care to invest offshore?
Well, I'm using the funds that we've been using at Brenthurst for quite some time, and those are mostly driven by momentum and tech. If you look at the Franklin US Opportunities Fund, it's a superb fund that has delivered almost as good as Piet's, but we've been doing 25% per year for about 7 years on that fund now. And that's typical US focused, and it's loaded with Amazon, Visa, Alphabet, Nvidia, etc. All the well-known brand names that you would expect. And then we have, our old friend Anthony Ginsberg. He's got a tech mega trend, which is even more focused on the tech mega trends. And smaller companies, not that well known in South Africa, but that fund is a very, very cheap ETF. You just buy it, and Anthony and his team will do the asset allocation. And then lastly, we're also using the Brenthurst Global Equity Fund, which is a global ETF fund, a very cheap one. It's also run by Glenn Owen out of Momentum in London. And those are the funds that have been working for us. And until that cycle ends, that's the funds that we will be using. My job, as will be Piet's, and Piet is anticipating a run in the small and the mid-cap stocks, and he's been proven that there's value to be had. And, I still think that there's some run left in the tech. The tech stocks have dominated. It's something that we don't have in South Africa. I mean, the global tech market, is now 26% of the US market, and you have to be in that space. If you look at what Tesla has done in the last month, for instance, I mean, from $650 a year ago, it's now $1,200. I mean, that's just phenomenal by our local Boykie. And, a lot of our clients have done extremely well out of Tesla. The big trick comes to when you make those calls. When is there what will the impact be of increased U.S. interest rates? Will it hit the tech stocks? Will it affect emerging markets? And then, of course, we have the big variable, which is the currency. And that, of course, is the mug's game most of the time. And, we try and we take cognizance of the currency, and it can work for you and it can work against you. But the cycles are deep and big. And that's when we will try and make calls on when we allocate money in or out of that particular fund.
Have you allocated it all now at, 1530, 1540 at that level, or are you holding back a little?
I think I've gone boots in all. We took the money out on Friday. We purchased the units. I haven't got confirmation, but it's around about current levels, 1520, 1530. And, again, I'm a very bad market timer. Over 30 years, I've learned I'm not a great market timer. The little bit of success I've had in markets has been identifying trends developing in the markets and then allocating to fund managers who are good in those trends. So I'm more a trend watcher than a market timer. I've given up on market timing a long time ago. And since then, my performance has been much, much better for myself and for my close family who now love me because I don't do market timing anymore.
Magnus Heystek, Piet Viljoen, well, best of luck to both of you. It's going to be fascinating to see who is going to emerge the victor over 5 years. But before we close off, Piet, at around 1520 Rand dollar, is this a level that if you were managing the offshore component, would you be investing all of it now or staggering it?
So I do manage a fund called the Counterpoint Worldwide Flexible Fund, which can invest anywhere in the world, and has about 54% of its assets in South Africa. And I'm actually allocating a little bit more towards South Africa right now.
But as far as the rand is concerned, when you're buying offshore investments,
I'm bringing money back from
bringing
offshore.
Money back at 15.
Bringing money back from offshore into South Africa. Yeah.
So that would suggest you think that it's that the rand is a little excessively weak.
Yes, I think so. Yeah.
So if you were managing it, you would have waited a little while before investing offshore?
Look, I have to say that I agree with Magnus on the market timing aspect of things. I think it's hard to do, and it's almost impossible to do consistently well. So that's a very hard thing. But all that we do in that fund, the flexible fund, is that we have what we think is a fair value calculation of the rand, which is based on inflation differentials. And right now at 15.20, the rand is pulled far away again from that fair value, and that's what we use as a trigger to allocate towards the rand. Whether it's going to be right in the short term or not is who knows? I don't know.